Looking for the best opportunities in Perth property? Get the local area expertise you need from Momentum Wealth, WA's trusted property investment consultants. Market insights, advice and representation from award-winning buyers agents and REWA Hall of Fame inductees. Visit Momentum Wealth's website at momentumwealth.com.au to organise your obligation-free consultation today.
Welcome to the Smart Property Investment Show with your host, Phil Tarrant.
Hi, everyone. How are you going? Thanks for joining us. Hoping you all enjoyed Australia Day. Here we are on the other side of it now, and that's normally the trigger point. It's like a big horn goes off that says, get back to work for those who have long summer breaks. It typically is the catalyst for making things happen again. Nothing happens in Australia, they reckon, until Australia Day. So now that's gone and passed, and there's a hot one, I tell you that, in Sydney. Very much like property markets. No matter where you're investing in Australia right now, it feels as though you can't go wrong. But buyer beware, just because everyone wants to be in property doesn't necessarily mean it's the right thing for you. I'm going to have a bit of a chat about that today, amongst a whole bunch of other stuff in relation to the market in this post-COVID world. Particularly, is it time for property investors to think differently in this new COVID world? I've been chatting about it during this whole COVID environment. We're now through what I hope is a recent spike over the Christmas period. A lot of borders have been shut down. I know restrictions are starting to ease here in Sydney. Hopefully they can open borders back up again, which should be an enabler for property investors, but that doesn't necessarily mean that you need to get on a plane yourself. We're going to have a chat about all this stuff. Simon Pressley from Propertyology, Head of Research. Simon, how you going? You well?
Very well, Phil. Thank you for having us back, mate, and Happy New Year to you.
Yeah, Happy New Year. It has been, last time we spoke was the latter part of 2020, and I'd like some of our listeners to go back and listen to our narrative over 2020 in COVID, including a really good live broadcast that we did, Simon, which was really informative. And I think we've pretty much held the course on how it was going to play out, and here we are in 2021. I think it's going to be potentially the biggest number of years for property in potentially this generation.
Yes, probably about 6 months before COVID arrived and disrupted our lives, Phil. We went on record and sort of said that we felt the biggest boom Australia had seen for at least 15 years was upon us. And look, on reflection, all COVID did was press the pause button for a period of sort of 2-3 months, in some parts of Australia for a bit longer than that. But as we'll talk about today, COVID's disrupted lifestyles, and it does affect some things about property markets, but COVID is not the property market. And lots of things about COVID actually don't affect property markets at all.
And we'll break that down today. But just in general, mate, you're busy at the moment. I think there's buyers agents all across Australia looking for stock, and there's not a lot out there.
We're always busy. I guess it's, busy doing different things at different times. I must admit that one of the things I have absolutely loved about COVID, Phil, was busier than normal, trying to figure out how COVID, bearing in mind this has never happened before, how COVID will affect property markets. As a property market professional, I've loved that. Now our busiest challenge is a combination of finding the right property for our clients. And there's a couple of exciting markets in different parts of the country that we want to get active in, but we first need to get through all these border controls to do our field trips. And that's create some challenges.
Well, I'll do my best to try and extract some locations out of you, mate, but I know you generally keep that pretty tight, close to your chest. But look, over 2020, we were catching up, it felt like monthly on the Smart Property Investment Show, chatting around what is happening and hopefully giving some sense of the narrative around COVID-19 and how property investors can act and operate in that environment. 12 months on from really when it kicked off. And for me, COVID really started. I remember all the memes going around about this time last year of people eating bats in Wuhan and this crazy virus, which was out there and no one really took it too seriously. For me, it hit home when I spent some time in Singapore in February. And when I arrived there, they were taking temperature checks, and you go into the hotels, you're getting your temperature test. I went, hang on a second, something's going on here. I remember flying back from Singapore in the middle of February going, hey, something just around the corner is about to hit Australia hard. So that's when sort of COVID started for me. And, that's 12 months ago already, and that's gone fast. But, 12 months on from COVID-19, the commencement of COVID-19, and for people that's going to mean different times. What do you think we've really learned? Is there anything from last year that might warrant property investors to think differently this year? Thoughts, mate?
Yeah, I would encourage everyone to think from a property market perspective, and this is how investors can change their thinking from the pre-COVID days, is COVID's effect on property is how it changes human behaviour. COVID has nothing to do with the creation of or supply of dwellings, has no impact on that. COVID has some impact on some parts of our economy, but large parts of our economy, it doesn't affect it at all. Where it has had the biggest impact, and I'm not talking every single person here because we're all different, but some behaviours have changed, and some of those behavioural changes will affect how people live, where they live, which is a property somewhere, and how or where they earn their income. If we think about that, and we'll get through that through this discussion, they're the biggest changes from a property market perspective. Many of the changes, last time we chat, Phil, we were talking about fundamentals. What does that word mean and what are the fundamentals? COVID's a germ. It's a virus. It doesn't really affect those fundamentals. We're going to dig into a bit about behavioural changes.
Yeah, and I think that's what most people's journey will be through COVID. And let's be, brass tacks. Some people have been really impacted by COVID. Some sectors of the working Australians have been really impacted by COVID. If you work in aviation, if you work in hospitality, if you work in retail, been hit really hard. At other sectors of the economy, it's been boom time, right? Share price growth off the charts, dividends, getting distributed all over the joint. It's been a great time for a lot of different industries. So some people have done it harder than others, and I'm really conscious of that. And some of them are property investors as well. Well, most property investors will have been impacted in some capacity in that there was a rental moratorium where you couldn't punt people out of investment properties. There's been a shift in dynamics of how some properties have been rented. There's been a flight now to Airbnb properties and rural stuff. If you have that strategy, you've done really well. But it has been an impact, and it has been quite a considerable impact for a lot of people. When you look at your business now and the work that you're doing, Simon, what's really changed for you as a result of COVID?
The biggest change for us is we have adopted the work from home business model permanently.
Okay.
Propertyology's team, like all sorts of businesses, white collar type businesses in all sorts of industries, went to work from home. We waved goodbye. It was some date in late March, I think. We waved goodbye thinking we'll see each other, our faces back in the office in a few weeks, maybe a couple of months. Didn't really know, did we? And the longer we were doing that, we become more productive. We still found ways to remain connected, and so much so that after a few months of doing it, called the team together and we weighed up the pros and cons, and it has become a permanent decision for us, and one we don't have to do. We could easily be in our office today, but the overall pros and cons, we all feel much better for working from home. We're enormously more productive than what we were before. And that is one thing that we'll talk about today that will affect property markets. But it's not for everyone, but it is a definite thing that's affected lots of households that would not have occurred if it was not for the germ.
Yeah,
lots of things have, it's evolution, I suppose. If we sort of think just in the last 20 years, Phil, like large parts of Australia 20 years ago didn't have all these high-rise towers. Sydney's had it for a lot longer than that, but most parts of Australia didn't have all these high-rise towers 20 years ago. iPhones, we only just started using them widely 10 years ago. This time 10 years ago, businesses were communicating using fax machines and posting letters. Things evolve quickly. COVID is definitely a part of the evolution of how we live in this big country called Australia.
Yeah, and it is a big country called Australia. It's a very diverse country as well, and it is a great place to live. You only need to think of how, as a nation, we've navigated, even this most recent spike that we've seen in Sydney and borders getting locked up and stuff, just how we've reacted to it compared to, some comparable markets, and that might be the UK, where I remember seeing some numbers somewhere that at a point in time, both Melbourne and the UK or Britain had 700 odd new sort of community infections in one day. We're back pretty much down to zero community infections in Australia. And only a month ago, the UK was topping out at 50 odd thousand new infections every single day. So it goes to show how we've reacted and operated as a nation, and how that's going to support long-term sort of sustainable advancement of Australia moving forward. But you talked about this behavioural stuff, and one of them was the fact that you're now a work from home type business. And what we've seen and what we will see is a shift towards flexibility for how Australians work, empowered by, whether or not you think the NBN's a good thing. They still reckon our internet's sort of as good as Slovenia's or somewhere or other. But how are these things, do you think, are going to fundamentally change property markets moving forward, Simon, in that the way in which we live is going to evolve and change, and therefore should property investment strategy change in lockstep with that?
Yeah, I guess what we're talking about is trends, and bearing in mind before I sort of, rattle off a few new trends directly because of COVID, that doesn't mean everyone listening to this will be adopting these trends. One individual does or does not do doesn't constitute a trend, but if there's a big enough critical mass doing something differently, then we've created a new trend. So some trends that have already occurred, there's a heck of a lot less popularity for living in a high-rise apartment than this time a year ago. If you think, what is COVID from a living perspective, there's a greater appreciation for space. The germ breeds in congestion. So there's a much greater appreciation to get away from the congestion. And there's this, I guess, innate desire to control as much as we can within our lives to give us confidence for things not changing on us, a border closing, or a community being forced into lockdown. That not only restricts what we can and can't do day to day and our lifestyle, but it also for some people affects how they can earn an income, or in some cases earn an income at all. So we've had a year to process all these restrictions, things that we never, ever, ever thought would be forced upon us. There's one thing that's, I think, common to all humans. It's we don't like being told we can't do something, especially if we've done it before and we've enjoyed it. We have a problem with our kids. You and I are parents, try telling a child you can't do this. And that's one way how I think of COVID. So people are trying to figure out for themselves, how can I do the things that I like to do most? So we are seeing people move from an apartment to live in the suburbs, for example. We're seeing others go one step further than that. And they are going, I don't actually want to live in this town anymore. I want to live in another town. We've seen instances of people all around Australia that have fast-tracked a transition to retirement. What I mean by that, they haven't retired now, but they've always had this idyllic, I want to live in location X when I retire. And COVID might have forced them to work from home. And they've trialled that and they've gone, I like this. I can now do this from wherever I want. And as they've stepped through things for their own future, they've decided that they can actually relocate to wherever that idyllic retirement lifestyle was now in the year 2020 or 2021 and continue to work until they formally retire. So all these things is what I call, I guess, a transference of housing demand. When someone, was living in one property or one town or city and moves to another, it's got nothing to do with population growth, but the demand has shifted from where they were to where they've moved to. And when this happens on a big enough scale, it puts a lot of pressure on property prices.
And some people in the market view you as a bit of a contrarian investor. Some people would disagree with some of your philosophies towards how and why to invest. You've been very vocal over the whole time I've known you, Simon, of the opportunity to invest outside of the capital cities. Not saying that you don't think capital city investment is a good thing, but you've been very vocal about opportunities in regional and rural Australia. When you think of COVID-19, has that just sort of exacerbated some of those theories you've had around these non-capital city locations? And how do you see that evolving into the future?
Yeah, not everything can be blamed on COVID, I think, because you can't have a conversation with anyone today without raising COVID because it's with us. But, some things were happening already. Regions, for example, I think we discussed this in our last podcast. The 3 years before COVID, Australia's 8 capital cities had a net population decline of 53,000 people from internal migration. That's got nothing to do with COVID. That was the 3 years ending June 2019. So there has been this growing appreciation for different parts of regional Australia for quite some time. But I think COVID will benefit the regions. We can't travel overseas, for example. So there'll be plenty of people that we all have holidays, or most of us have holidays at least once a year. Some people, that holiday would have been overseas somewhere. When you can't do that with COVID around, it doesn't mean they don't go on a holiday. They'll go somewhere else within Australia. And in doing that, some people will enjoy the holiday, enjoy the extra freedom they have in whichever part of regional Australia they're enjoying their holiday and going, geez, I remember the days a year ago when I could do that in my home city. And that's been, not as achievable as before because of COVID. Some people are going, geez, wonder if we can live here. Others, the holiday that they go to in different parts of regional Australia, they've never been to before. But because of COVID, they've like, well, let's go and explore here, let's go and explore there. And that's a great thing for all Australians, is that it is an enormous, beautiful country, diverse country, as you rightly said, Phil. But lots of us haven't really explored much of it. And that's a great thing from COVID, where we are really appreciating how lucky we are.
Yeah, I think most people are so busy to get on a plane to head out to Fiji or further afield with the family when they get holidays, rather than exploring this great brown and sometimes green land. But, the challenge you have, and what I'm looking at and trying to think of practically, an example of sort of moving or the opportunities in regional rural Australia. I was just this weekend, I was at a kid's birthday party in Bowral, which is down in the Southern Highlands and sort of 90 minutes from Sydney, beautiful part of the world. And there was a real estate agent there, and obviously got chatting real estate with them. And they're saying that it's off the charts down there. It's a very desirable place to live. It's one of those commutable. You can commute from there to Sydney if you're keen every single day, or if you want to sort of go in the office 2 or 3 days a week and the rest of the time down there, there's nothing available. So no stock, and anything that does sell, it's just rapidly rising in prices. So a lot of people are making decisions now, and there's even some new build stuff down there, mate, new suburbs where, people bought blocks for 200, put another 200, 300,000 bucks in it, so 500. They're going for $800,000-900,000 now. So, how do you know as an investor, or even if you're looking to make a move, as an owner occupier, like I would say the market is hot right now in these regional areas, and you would be buying at the top of the market. How do you balance investing in that today versus what it might look like in 5 years' time? Because that growth can't continue, or can it?
Look, what you described there with Bowral is quite literally happening in dozens and dozens and dozens of towns and cities all over Australia. Some of that activity has been accentuated because of COVID, but people will be surprised that that pressure was building in not all locations, but a lot of locations well before COVID. Now, our buyers agents were seeing that firsthand with, actively trying to help people invest into particular markets and bugger all stock to choose from. So having to contact our client and apologise that I know we've been looking for a couple of weeks, but, you're paying us to be fussy and there's nothing that we're happy with yet. That pressure was there before COVID, and the things we were talking about earlier with people exploring different parts of Australia or indeed relocating is just added to that pressure. In terms of making a good investment decision, bring it back to the fundamentals. The things that we should have done as an investor to pick a location in Australia before COVID, 12 months ago, we should still do today. We need to find communities that have a stable population. We've said before, it's got nothing to do with the size of the population, but is the population stable? Look for locations that have a diverse economy. Look for a big bunch of evidence that give us confidence that that local economy is expanding. That's not data, that's a whole heap of business decisions and government decisions and industry decisions. That's where the future demand will come from. Have we looked at all segments of supply? The number of the supply properties listed for sale is one part of it. Have we looked at all parts of supply? These are the things that we should have been doing, forever and a day, and are just as important now. The extra layer of things that we consider about is how does COVID affect this location? There's some parts of Australia that COVID will have an adverse effect on, and there are other parts of Australia, lots of them in fact, that will have and is already having a positive impact on local property markets.
So just to crystallise this point about what have we learned from COVID, or how we should be thinking differently as a result of COVID, fundamentally it's largely the same as what it was. There's just a couple of nuances about potentially where people might be living and therefore the pressure on prices around it, like new build, high-rise apartments, for example. It's business as usual in many ways, isn't it?
It is, but some key changes that all investors would be wise to be aware of. I've mentioned a few of these things already. Like COVID it breeds in congestion. So, think of this practically. This is nothing about data. Think of this practically. Wherever there's the most congestion is the greatest risk for future breakouts, and none of us like being locked up. So that's a key clue for locations that are more vulnerable. It doesn't mean that they'll crash or anything like that. It means they are more susceptible for disruption. And where there's more susceptibility to that, sadly for Melbourne, we have a case study. Melbourne's had the biggest lockdown, I believe, of any city in the world, not just Australia, the stage 4 lockdown of 4 months. What that has already done, this is supported by official data, Melbourne's internal migration each 6 months, it usually increases by about 2,000 people. So not a lot, but it's usually positive. The 6 months up to June 2020, which is the most recent data available, Melbourne's population declined by 10,000 people. That's a direct reaction. That's 10,000 people who were living in Melbourne that because of COVID said, we're not going to live here anymore. Now, where have they gone? Literally all corners of the country, right? Mm-hmm. But that 10,000 population decline would not have occurred if it was not for COVID. I said that figure was up to June 2020. Melbourne started its lockdown in July. So if there's already 10,000 people that have left before it had its hard lockdown, how many people during that lockdown that had their lives totally tipped upside down have sort of gone, this ain't for us, when we're allowed out, we're going to go somewhere where there's less risk of that happening again. So that's a tangible example of how COVID affects human behaviour. We've seen a lot of changes in rental patterns, measuring this through the number of properties that were listed for rent in the pre-COVID period to today. And we parcel things up into what I'll call a category A and a category B. Category B is locations that at the moment rents are as soft as butter. The balance is in the tenant's favour, where they've got all these properties to pick from in regards to where they choose to rent. In category A is the exact opposite, where there's just nothing to pick from. And there are real life stories of families having to live in a caravan because they cannot rent a suitable house or apartment. So in category B, we've got 40% of our population, and they live in two cities, Sydney and Melbourne. In category A, we got all of the rest of Australia, the other 60%. The number of properties listed for rent today, Phil, in Sydney and Melbourne is about 53,000 people. The other 60% of Australia's population only have 20,000 properties to pick from. So we've got 40% of our population that have got so much choice for where to live, and the other 60% have the complete opposite problem. They're fighting over themselves and rents are going through the roof. Some of this was building before COVID, and then there's more pressure that's been added because of COVID.
Interesting dynamic. We're going to have a quick break. When we come back, Simon, let's have a chat about what really hasn't changed that much back in a moment.
Whether you're an avid property investor or about to buy your first property, why do it alone when you could partner with Australia's best buyer's agent? Director of Pure Property Investment, Property Investment Professionals of Australia board member and REB Buyer's Agent of the Year, Paul Glossop, can take your portfolio to the next level. Get in touch today to discuss your investment goals. Get one-on-one insight from Paul Glossop. And for the first 100 people, this service is completely free. Head to purepropertyinvestment.com today to schedule your consult with Paul Glossop directly.
Welcome back, everyone. Phil Tarrant, host of the Smart Property Investment Show with Simon Pressley, Head of Research at Propertyology. Regular guest we have onto the show. He seems to know what he's talking about most of the time. Often challenge him, but he typically gets it right. So we're chatting about COVID and what have we learned, think differently. What really hasn't changed, Simon, as a result of COVID? We spoke about the fundamentals, but is there anything else which is clear and present that, irrespective of COVID, whether it was here or not, hasn't changed at all?
Yeah. What COVID did, I guess, when it first was unfolding, it created an enormous amount of fear. And with fear about anything, it creates uncertainty and it muddies people's minds. And without that clarity, you can't think properly. So if we go back to as COVID was hitting our shores and every Tom, Dick and Harry was given their property market forecasts and, there was all these property market crashes that we're all going to have. The biggest crash Australian real estate has ever seen, that was fear. We know that now because property markets didn't crash. Indeed, 7 out of 8 capital cities, their median house price increased in the year 2020 and pretty much every part of regional Australia also increased. Why is that? Because of some things that COVID does not affect. Property is shelter. With or without a germ. We always need somewhere to live. What didn't change because of COVID is the all-time record low volume of properties listed for sale across Australia. Directly before COVID arriving, large parts of Australia were starting to boom. I think people have forgotten the auction clearance rates were 80% on the weekend and, all these people at open homes. And that was right throughout Australia. It wasn't just in Sydney and Melbourne. The pause button was just pressed, as I said earlier, when COVID arrived. So the supply of properties listed for sale hasn't changed because of COVID. If anything, it has got tighter. The volume of properties available for rent, as I said, if we exclude our two biggest cities, Brisbane's not as tight like everywhere else, but it's sort of in the middle. It's a balanced market. But the rest of Australia, it's rental crisis stuff. Interest rates, they were already low before COVID. They're still low now. We've probably had 2 extra cuts. If anything, all COVID has done is locked in these all-time record low interest rates for many more years, I think, not just in Australia, but globally. And COVID doesn't affect credit supply. If anything, I think we'll see some positive changes or some improvements to credit. So there are a lot more positives for Australian property markets from COVID than negatives, even though none of us like our being told we can't do this and can't do that.
Yeah, absolutely. So just on that basis then, I hate the term, but I'll use it. Is this the new normal? Is there a new normal, or is this just how it's going to be moving forward? And you said some sort of headline stuff there, as in access to credit is improving. We only remember sort of 2, 3, 4 years ago, it was a lot harder to get credit.
Horrible, wasn't it?
It was absolutely horrible. So it is getting easier. The regulators are changing how mortgage brokers, for example, will operate around responsible lending, therefore making it more accessible. It's the cheapest money's ever been, low stock on markets. Australia in a quite a good place globally in terms of its sort of GDP growth and opportunities around. It's in many ways, it's a golden age for Australia moving into this sort of decade, despite some of the challenges it has sort of geopolitical, geostrategic and its trading stuff. But is this just the way it's going to be moving forward? And how long do you reckon it's going to be like this, mate?
I do actually. I never thought until a couple of months ago, I never thought I'd say that. My expertise is property markets, not health. And I'll admit when COVID arrived, I sort of thought, what's all this fuss about? I never, heard anything like this before and assumed, I think like most Australians, this would just be a short window in time in terms of the changes. But no, the medical people in my life that I talk to, they dumbed it down for me, which I really appreciate. And they said, Simon, the common cold has been, on planet Earth for a lot longer than any living human being. The flu's been on planet Earth for a lot longer. You cannot kill a virus. You physically cannot kill a virus. So you cannot kill the coronavirus. Yep, we've got a vaccine, which is being rolled out in London at the moment. We still don't know how effective it's going to be. Again, as the hearsay, the medical people that talk to me, they say it's quite likely that even if this vaccine works, that similar to the flu, we'll need a new one every year. But let's bear in mind that the thing that's really important about COVID is that it's so infectious. So if the medical professionals are right, and we've always got COVID, just a different strand of it from year to year, that says to me that social distancing will always be applicable. We'll never be able to cram hundreds or thousands of people into one building or have all these big mass gatherings. We're always going to need to socially distance. That suggests to me that the new normal will mean that we will always have significant controls around our international border. Every single case of COVID in Australia, one way or another, has come from someone coming from overseas. So we're always going to have controls around that. That will be a new normal. There'll always be an outbreak here or there somewhere. None of us want it, but to me, it's realistic to expect it will pop up every so often and a state border will close somewhere. That will be the new normal. But as we've seen, we're dealing with this well. We've had 12 months to try this and try that and get better at it. So there's nothing for people to be alarmed about, but it is the new normal. The QR code, that's going to be the new normal everywhere we go to check in. And how this affects property is more and more and more, not just we saw it in 2020, we'll see it in 2021. And I think every year from here on in, we will see some Australians make a conscious decision to change where they live and how they live to increasingly get more control and more certainty in their life.
So this concept then of the new normal, or just the way it's going to be, to your point, it's going to impact property markets, but that's just going to be normalised as well. So I want to have a chat about that. We'll just go to a break beforehand, back in a moment.
Are low interest rates impacting on your investment returns? It's time to rethink. Rethink Investing creates wealth for clients through the strategic purchase of positively geared, high cash flow commercial property. Industrial properties, retail assets, or office spaces can be a smart investment option that produces significant and long-term return on investment. Rethink your investment options and look to commercial property. Learn more at rethinkinvesting.com.au. Rethink Investing, Australia's #1 commercial buyers agency.
Welcome back, everyone. Phil Tarrant, host of the Smart Property Investment Show with Simon Pressley, head of research at Propertyology. So in this new environment, Simon, so it's like pre-COVID and post-COVID. So it's going to be post-COVID now forever, and how that will be normalised and go back to how it was prior to COVID, still to be played out. But to echo your points, I reckon fundamentally things are going to be different, but then that's completely normal then. So how do you approach the world now in a post-COVID environment, and by that I mean Australia, as a property investor? What do you got to do to be successful?
Yeah, I guess it's thinking, and again, if you're thinking about what you would do, not as in Phil Tarrant, anyone listening to this, if you're thinking about, I will do this or I won't do that, you're not thinking like a property investor, you're thinking about your own home. To think like a property investor, you need to think about where will they be a big enough critical mass of something where there's going to be a change of behaviour, whether you are part of that, change or not. You need to think like that. So to me, you mentioned some of these before, Phil. In industries or particular occupation types where they require masses of people, international students, for example. Sadly, if you work in that sector, it's already been problematic, and I can't see that improving significantly anytime soon. So right throughout Australia, there are some universities that, have a big segment of international students. We need to have a think about, well, where are they? And, where do they live and what jobs are affected by that? And that then feeds through to how does that affect property markets. Some other occupation types, I think hotels are in big, big problems. Now, as property investors and everyone listening to this show, we don't invest in hotels, but hotels is an industry type. So if we think about the occupations within that, those who work within hotels, there'll be less jobs in the hotel sector, sadly, for that. So, towns and cities around Australia where there's lots of jobs in the hotel sector, there won't be as many people working in that industry space as what we did before. Conversely, there'll be greater appreciation for holidaying in an Airbnb. Why is that? Because it's one family living in one dwelling as opposed to hundreds or thousands of families congregating in one big building and greater risk of contagion. And a lot of these hotels are in the big congested cities as well. So these are some pieces that we can start to think differently. The airline sector, as you mentioned, domestic travel, yes, that's happening. I think as we get more comfortable as Australians, we'll progressively see more people who are prepared to take a flight from Sydney to Brisbane or wherever. But driving by car, that's going to increase. We're going to see more people that just, rightly or wrongly, they're going to be fearful of going to an airport and they still want to go on a holiday. So they will go on a holiday within a 3 or 4 hour drive max of wherever they live. So they're spending their money in communities that they wouldn't have spent before. Whether they live in that hypothetical location or not, it's not greatly relative. But if a lot of people do that, that's a lot of their purse being spent in a different part of regional Australia that wouldn't have been spent there before. So that extra money going through the cash registers in those locations is good for their economy. So work from home, we mentioned that. I think we need to elaborate on that. The only official data from work from home is the last time Australians did census, which was August 2016. We do census every 5 years. One of the questionnaires that we all completed in the last census was, where do you go to work and where is your predominant place of work? One of the options we had in the multiple choice question was my predominant place of work is home. So there was only 4.7% of all jobs in 2016 where home was the dominant place of work. I would be very, very surprised if when we complete that same questionnaire in August this year, Phil, if that figure hasn't increased from 4.7 to somewhere over 10%. How does that affect property markets? Well, 10% of a country's workforce, we've got about 13 million jobs in Australia. So that would mean that 1.3 million households, their predominant place of work is home. That's a big, big figure. And lots of those homes won't be where home was last year. There are people all over Australia living there in a different town or city today, different to before COVID, and most of those people had no plans at all to relocate. COVID has caused that.
So you've always been an advocate of investing outside of capital cities and looking over your left shoulder at the moment, mate, to a map of Australia. And I can see a lot of coloured pins all over it, all over Australia. That's all well and good. Not all places, not all regional locations are created equally. And you spoke about shifting dynamics in how people holiday, how people spend money, how regional and rural economies will be shaped by changes in habits of behaviour for how people holiday or how people work, etc. What should be sort of your filter for working out whether or not a particular location in lockstep with changing habits and behaviours as a result of COVID are investable locations?
Yeah, that's a great question because I think I'm very confident what we're going to see is, you mentioned Bowral earlier. Every state and territory in Australia has got beautiful places like that, idyllic lifestyles that we go to, for holidays. Markets like that are going to go nuts. They are already going nuts. The key thing for an investor, though, is still bring it back to this is a financial decision. Property is not a tradable commodity like shares that we can buy them in the morning and sell in the afternoon. The transaction costs to buy and sell property are significant. So we're making decisions with a 5, 10, 15-year outlook in mind. So whilst the dozens and dozens of Bowrals throughout Australia, I think will do very, very well, we still need to go back to the basics of sustainable investing. Does it have a stable population? Does it have a diverse economy? If it is a one industry tourism town, it may well do very, very well for the next couple of years. But how will it perform over the course of the next 2 years if something happens with tourism? For example, will that be a sustainable market? Probably not. So regions, I'm just as open-minded to regions as I am capital cities. Or what I've always done and will unapologetically always do is encourage all investors to consider Every town and city in Australia is the equivalent of the company on the stock exchange. And you owe it to yourself, not to me or anybody else. You owe it to yourself to consider 100% of your options. I've invested in capital cities before. I live in the capital city. I'll invest in capital cities again. But there are a lot more regional options for me than capital cities. We've only got 8 capital cities. So, the reason, I guess, we talk a lot about regions is because there are 200 of the bloody things. There's only 8 capital cities.
Yeah.
But, you need to look at all of them. And I am absolutely certain that just as we saw in the last 5 years before COVID, the best performed property markets were not capital cities. They were regions, and there was lots of them. And I'm absolutely certain that the next 5 years, the best performed property markets will again be regions. Maybe not the same ones as the last 5 years, but they will be regions, mark my words.
Yeah, and no doubt you tell me you'll be quite vague here, but I think of Sydney, it's an easier location, and regions, which are areas around Sydney, which I know are moving. And we spoke about Bowral, sort of Hunter Valley is another hot spot. That's a bit more sort of tree change stuff, but the Illawarra around Wollongong and that belt is off the charts. Central Coast, off the charts.
Yep, they're all regions.
They're all regions. Can help point our investors somewhere. Give us a nice spot in each of the major states where they should be maybe having a little nose around.
Let me do better than that. Let me give you 4 or 5 in each state and territory in Australia. How about that?
Okay, good.
Which state do you want to start with? Any particular
Let's start
order?
in Queensland.
Start in Queensland. Okay. No particular order, but Queensland, places that will do well and are sustainable markets to consider. I'll start at the top. Townsville, Hervey Bay, Sunshine Coast, Gold Coast, Toowoomba, Warwick. There's lots of considerations.
There's lots there. Okay, let's go south then, New South Wales.
New South Wales, already among the best performed markets in all of Australia over the last 5 years. Places like Coffs Harbour, Ballina, they are expensive though. Right? Buying a standard house in those markets is more expensive than several capital cities, but they'll do well, and they are examples of sustainable regional markets. Much better value for money and very sustainable are places like Armidale, places like Orange. Dubbo's going crazy at the moment. You can't book a restaurant. You can't book an Airbnb. It's going nuts. Its unemployment rate is about 2%. They got more jobs than people local to live there. That's just one regional location, but there's lots of examples like Dubbo. Wagga Wagga. In the south of New South Wales, you've mentioned Bowra. There's not a lot down there in terms of big regions, the mini capital cities that I call them. They're sort of more north of Sydney. Victoria, you can then consider locations like Shepparton. I think Bendigo is one of the best value for money investments in Australia. That's gold rush stuff. Bendigo its economy is as diverse as any capital city, more diverse than several capital cities. Whether it's manufacturing, whether it's natural resources, whether it's tourism, health, education, it's a mini capital city. Warrnambool is another in Victoria that's got a lot of merit. In the far north of Victoria, border town, Albury-Wodonga has a lot of merit. Wangaratta, most people laugh when they hear that name, wouldn't even know where it is on a map. Median house price of Wangaratta over the last 20 years has outperformed the median apartment price of Sydney. And there's lots of Wangarattas, throughout Australia. Where do we go to next, Phil? Which
South Australia.
South Australia, 75% of South Australia's population live in Adelaide. So there's not a heck of a lot to regional South Australia. But at the Adelaide Hills, there's got lots of,
When it's not burning. Yeah.
It is susceptible to bushfires, yes. Yeah. But Bowral, there are lots of little villages like Bowral in the Adelaide Hills. Very, desirable places to live. Mount Barker is part of the Adelaide Hills, but a bigger regional city. Place that's booming in South Australia at the moment, Mount Gambier, wine country, beautiful region in Mount Gambier. Where next? Tassie.
Let's go to Tassie.
I think Tasmania and Queensland will be the 2 states that will benefit most from internal migration. When we're talking about the person that doesn't matter where they used to live, if they've decided to live from home permanently, and then home being somewhere different to where it was before, as in a completely different, moved town, I think Tasmania and Queensland will be the 2 biggest beneficiaries from that. Launceston has been a stellar performer already for the last 3 years, and as far forward as we can anticipate, will continue to be a very strong market, strong rental market, as well as really good capital growth in Launceston. Burnie, arguably Australia's most affordable real estate. You can find a good quality detached house in Burnie for low 300s up to $350,000. To Port City, there's lots of the smaller villages throughout Tassie, lots and lots of them. They're not that far to drive from the bigger regions, the Burnie, the Launceston, the Davenport. So, whilst the village themselves might only have 5,000 people, they're only half an hour away from a major regional city. WA.
Well, everyone's talking about Perth at the moment. Let's go regional.
Yep. WA, Perth's outlook is good as any capital city in Australia. But I've always said this with Perth, its lack of economic diversity makes it a risky market in the event that if something happened between Australia and China, Perth is in the gun. Better opportunities in regional Western Australia than the capital city itself, in my opinion, whether it's north of Perth in Geraldton. Certainly avoid the high risk, although they're booming at the moment, the Port Hedlands and Karratha. They are the traditional one industry mining town. Geraldton has diversity. South of Perth, it's places like Busselton. There's a research report on the Propertyology website. You can read about Busselton. Albany and Esperance have diversity to them, and median house prices around that sort of 400,000 mark.
It's good. And we've got to remember Northern Territory. Most of that's regional. I'm going to cop some hate mail around
Northern Territory has been, of all things that have happened out of COVID, Phil, the biggest surprise packet for me has been Darwin. Its market's probably grown 10%. I'll just question, is that sustainable? Because it's certainly not its economy that's caused that growth. We know that Darwin didn't have any COVID, and there were some people, maybe still are, who want to get to one part of the country, but to get there quicker, they've gone via Darwin. Spent a week in a hotel in Darwin, and maybe while they're there, they've bought some real estate. I'm not too sure.
Who knows? Well, mate, Simon, thanks for sharing that. It's pretty insightful stuff. And you go and check all that stuff. We report on all those different areas on smartpropertyinvestment.com.au. You can also go and check out the Propertyology website. I look forward to 2021, mate, as we navigate this property lark. I think it's going to be lots of conversations, Simon.
Biggest boom Australia has seen in more than 15 years. Mark my words. You heard it here
first. There we go. Well, let's get involved. Simon Pressley, Head of Research, Propertyology, regular guest on the Smart Property Investment Show. Thanks for your time, Simon.
Good on you, Phil.
Nice. Remember to check out smartpropertyinvestment.com.au. Heaps of information there around all those locations. Go and check it out. Use the suburb search function or regional search function. Social media, Smart Property HQ, if that's how you like to get your info. Quick favour for me, if you like what we're doing with this, team get a real kick out of the reviews, whichever platform you listen to. If you can give us one, that'd be great. And I'll see you again next time. Until then, bye-bye.
The information featured in this podcast is general in nature and does not take into consideration your financial situation or individual needs and should not be relied upon. Before making any investment, insurance, tax, property or financial planning decision, you should consult a licensed professional who can advise whether your decision is appropriate for you. Guests appearing on this podcast may have a commercial relationship with the companies mentioned.